In many respects, the U.S. economy has outperformed expectations so far this year. Will that trend continue in the final months of the year and into 2025? Through the first 3 quarters of the year, real economic growth, as measured by the Commerce Department's Gross Domestic Product report, has shown the economy to be growing at an average pace of just under 3%. By comparison, from 2012 through 2019, the 8 years prior to the pandemic, U.S. real GDP growth averaged 2.5%. We expect a moderation in the pace of expansion over the next few quarters to slowly bring the pace of growth down closer to 2%. Such a rate would be close to what the Congressional Budget Office currently sees as the U.S. economy's sustainable rate of growth at around 2%. A sustainable pace of growth for any economy is based on how many people are available to work and how productive they are. Importantly, a sustainable pace is when an economy is not growing too fast as to stimulate inflation, nor too slow as to cause a material rise in the unemployment rate. Though we expect the pace of economic activity to moderate, there are fundamental supports. Notably, the inflation picture has improved considerably in recent months. In September, the Labor Department's Consumer Price Index showed a year-over-year gain of 2.4%, much improved from the 3.7% pace a year earlier in September 2023. The improved inflation situation and projections for further improvements ahead have enticed the Federal Reserve to begin cutting interest rates. A slow and steady pace of cuts is likely to follow if inflation rates continue to ease. Currently, we see Fed officials as likely to cut the central bank's overnight lending rate by about 0.25% per quarter until the rate is down close to 3% from its current level of about 5%. Investors or potential home buyers should not expect mortgage rates to decline in lockstep with the Fed actions, but we do see some room for mortgage rates to decline modestly in coming quarters. As we look ahead, we believe the U.S. economy is on generally solid footing, with healthy consumer and corporate balance sheets. Of concern, however, is the pace of government indebtedness and high geopolitical tensions. These are issues that we are monitoring closely. In 2025, we currently see the U.S. economy as growing at a rate of about 2%, inflation rates dipping under 2%, and the unemployment rate remaining close to 4%. If you have questions about the economic outlook and its potential influence on your portfolio, please contact your Ameriprise financial advisor.